I'll have to admit, I don't understand everything about infinite banking. But what got us down this path was like what I was mentioning off before we were recording. Several of my rich friends have whole life insurance, which is a
Yeah,
component of infinite banking.
that's right.
They were raving how it enabled them to be able to get more. It enabled them to refinance more of their properties. One friend specifically said she was able to, I think, refinance one property that she previously could not,
Yeah,
and she was enabled to be able to buy 3 more investment properties. Right.
yeah,
So from being stuck against a brick wall to being able to open up opportunity. So that
yeah.
really got my interest. Right. And then I dumped this all in cherry, and then
And it all
I,
blossomed from there.
yeah, it all blossomed from there. I don't completely understand everything. I've signed off a whole bunch of paperwork. I admittedly didn't read. So Jason, talk to me as if I'm like my listener, one of my
Yeah.
17 listeners who isn't familiar with infinite banking or even whole life, because I think a lot of people know life insurance and term insurance.
Right.
Some may not even know that. And then until like 2 years ago, I'd never heard of whole life before.
No kidding. Really?
Who would tell you? Where would you find out? And also, not everyone qualifies,
You
right?
know, what's interesting about that, Erwin, is first of all, what you shared is not uncommon.
Mm-hmm.
And it really, I guess, goes back to if the minority of people in the world are accumulating and controlling wealth, then why do we continue to do what the majority do financially?
Yeah.
So this tool, this amazing, incredible tool called dividend paying participating whole life insurance has been in existence in Canada since 1847. And those who understand it utilize it. And it's been, if you talk to any life licensed advisor in the country, if you were to poll the majority of the life licensed advisors, great people doing great work serving Canadians, most would have at best a rudimentary understanding of the tool, because the industry focuses on the death benefit characteristics, not the financing characteristics. And when you're dealing with real estate investors, people who are focused on wealth accumulation, people who have an ambition and want to grow indestructible wealth, if you get around the circles of people who have already done that, dividend paying participating whole life is going to come up in the discussion of what you need to have in your arsenal. And the primary reason for that is the contractual guarantees, the liquidity, the access, the control, the ability to access capital in the form of unstructured loans. So if you're dealing with a real estate investor, for example, and you ask them, gosh, how much do you enjoy the process of having to go to a lender to expand your real estate portfolio? Not one has ever said to me, I just love sitting down with a banker or a loan officer going through that process. It's amazing. And even if you're networked with someone who you've got a great relationship with in the business, sooner or later you hit the ceiling. Hey, you know what? Your debt to income, your debt ratios, we're factoring everything in. We just can't lend you any more money. You're over leveraged. Whereas with the tool, the dividend paying participating whole life contract, you have ready access to a pool of financial value that's rising every single day, uninterrupted. And when you need access to capital, you can borrow up to whatever could have otherwise been lent from your policy, and it's unstructured. So when you need access to money from the life insurance company, they're not asking you for a credit check, income verification, a copy of your portfolio, your financials, personal guarantees, letters of credit, whatever that may be. They're asking you 2 questions. Do you want us to electronically deposit the money into your account or mail you a check? So the policy owner is in a position of total and absolute control. And I haven't met a single person yet in the real estate realm who doesn't want total and absolute control. And so among many other things, Erwin, that at the foundational level, everybody is familiar with the process of banking. They're just not controlling the function of banking as it relates to their needs. All the payments, all the money that flows through your hands and mine, it ends up right back in someone else's system. Whereas if you embrace the process of becoming your own banker, and you use dividend paying participating whole life insurance contracts as the tool and the place from which you implement that process, then you create indestructible wealth. And for clients of ours, especially those who have, similar to the example you shared, where they've been able to access capital to expand their real estate portfolio or get rid of the bankers much faster than what they were originally scheduled, it's a very peaceful, stress-free way of life when you don't have the bankers in your life. It's a very peaceful, stress-free existence. And when you achieve that stage, I'm 13 years into my journey, and you don't need to rely on a commercial bank for anything other than the convenience of debit, there's not a whole lot that'll stress you out. Isn't that good?
Mm-hmm, mm-hmm.
And so
what do people need to do to be able to obtain whole life insurance?
well, the first thing that they need to do is they need to meet with someone who is thoroughly familiar, not only with the anatomy of the policy, but how to coach and mentor somebody to utilize this tool properly.
Right. Because I was just having lunch with someone who has whole life, and he has the version that he can't take money from.
Oh, goodness. Well, there you go.
Right.
Thank you.
I don't know what damage he's gonna be, because he wants to. I don't know if he can just flip a switch. No. Okay. I won't tell him.
But yeah, I would say first.
And he's not the first I've heard this from. I've heard this at least 3 times in the last 2 months or so. They have the wrong whole life.
So important to work with somebody who's thoroughly familiar with it. And of course, I'm going to say that here at Ascendant Financial, our team, they are all thoroughly familiar with not only the tool, but how to coach and mentor policy owners on how to utilize this tool properly. Mm-hmm. Because you can put the best tool for the job in the hands of an incompetent.
Yeah.
Not only are they not going to turn out any good work with the tool, they're likely going to break the damn tool.
Okay. Oh no, so, hand me a hammer, I might hurt myself with
it. Me too. I am not handy in that way at all. That's for sure. But yeah, it's super important to do that. And also important to, if your listeners have not had the occasion to read some of the best material on the process of becoming your own banker. So for example, we just launched a new book, Caleb Williams and I co-authored. It's titled The End Asset for Canadians. Again, it's The End Asset for Canadians. And this book is an absolute must-have in your library, and your listeners can access it from endasset.ca. That's endasset.ca. And we can ship that right to their front door. And then, of course, there is the quote unquote Bible of the process of becoming your own banker, the infinite banking concept, which is R. Nelson Nash's book titled Becoming Your Own Banker. And I was blessed beyond the definition of good fortune to be mentored directly by Nelson for so many years. And in fact, there's a great documentary film that your listeners can view on YouTube at no cost. And it's titled, This is Nelson Nash. That's the name of the film. And listeners can view it at nelsonnashfilm.com. Again, that's nelsonnashfilm.com. And there's no cost to that. It's a 1-hour documentary that I had commissioned on my mentor, just as an incalculable token of gratitude and a deep appreciation for just how incredible it was to know him and to be mentored by him. And that film will give you a deeper glimpse into the essence of just how incredible this man was.
Mm-hmm. So now, Jason, I'm sure the listeners probably still confused what we're talking about. So I try to put myself in their shoes, because I often am confused. So an investor usually thinks in the basis of the simplest things that the investor thinks about is what's my investment?
Yeah.
And then what's the return? And then how much effort goes into it, right? So like, how much does someone need to? How much capital does one need to invest, and then how soon can one start seeing benefit from it?
Thank you for asking that. Really good question. So the amount of capital that goes into a policy is determined by the policy owner, and it has to meet 2 criteria. It's got to be a comfortable amount and an affordable amount. And the moment that money is deposited into the policy, there is a loan amount available immediately, dependent upon the life insurance company that the policy has been issued from. And then the policy itself has a contractual guarantee that cash value, so capital, is going to begin accumulating in that policy from day one, and it must accumulate to match the total death benefit by age 100 of the life that is insured. So in simplicity, Erwin, every single day that you are aging closer to 100, your aquarium, if you envision this, if your listeners picture this for a moment, your aquarium of financial value of capital is rising. It's growing every single day. There's no pandemic, bad economy, real estate cycle, risky stock market. There's no other economic factor that can take away any of that accumulating value. Here's why. Super important for your listeners to remember this distinction. The policy itself is a unilateral binding contract. It's not an investment. The insurance company itself is controlling and managing 100% of the investment function of the money pool. The policy owner's sole responsibility is to deposit the premium. The insurance company themselves are on the hook to satisfy the contractual guarantee of the cash value matching the death benefit by age 100. And the way that the policy is engineered is critical, because if it's engineered properly, the death benefit will rise every single year with no increase in premium. And so if we have an ever increasing death benefit, we have an ever aging policy owner or life insured, we have an ever increasing daily pool of financial value that just keeps going up no matter what, the possibilities become endless in terms of what you can take advantage of as it relates to opportunity that tracks you down. Here's a key message that my mentor used to share with me that I want to pass along to your audience. When you have ready access capital, opportunity will hunt you down. And it's the truth. I get tracked down by opportunity almost on a daily basis because I have ready access capital to quickly pounce and take advantage of opportunity. I don't have to wait or deal with lengthy, nosy credit checks or credit applications or bankers that need a Mount Everest of information. It's a phone call to the insurance company, and I get to take advantage of the opportunity that tracked me down. And so I hope that helps kind of frame up, some of the fundamentals or the foundation, if you will, of just how ultimately simple this truly is. Isn't that good?